almost 2.5 hours into trading. It is Friday, July 23rd. Hello, traders. I can't recall what I had for my last bullish pick, but I'm sure given the market breakout, it probably did very, very well. I've been trying to take some time off during the summer. One more reason for you to subscribe to my YouTube channel and to turn on your notifications so that you know when a new video has been posted. That way you don't have to keep coming back to the YouTube channel and checking if a new video is there. You'll know because you'll be notified. Big market rally today. I've had lots of members who are struggling. Trading is hard. I am not going to tell you that trading is easy. It's not. It's hard. But you can make it a lot more difficult than it really is. Everything that I teach, and you know this from all of my videos, market first, market first, market first. Second is stock selection. So let's make this super easy. Let's take out all the noise and all the clutter, and let's focus on one of my favorite searches, Pop Bull. Before the open today, I told members, I only want you looking at Pop Bull. If you're a struggling trader, only look at Pop Bull. There's no other stock in the universe that you should be considering. And so the exercise was we were going to be watching for a bullish 10P cross, and we get it right here. 10P is my indicator that I use for the S&P 500. It is the only indicator I use. When we get a big trough in the 10P indicator and a bullish cross, we are going to be buying stocks on the Pop Bull list, and I will review each and every one of them. So what did the market do today? It gapped higher right out of the gate. Now we had two red candles in here, which looked very suspicious. I did try a short in here, and I actually made a little bit of money on it, but I did not like the price action because the prices were very sticky, meaning the bid was very sticky, and I ended up covering in here for a small gain. Now, as this was unfolding, I had mentioned to members, look, we're getting this big 10P drop, which would normally be bearish, and we would see the market have a gap reversal and come in. When we get this big drop in the 10P indicator and the market is going sideways, compressing, then we know this is a bullish divergence. When we get a bullish divergence, we know that the trend strength is extremely strong. And think about it. If you had a gap higher today on the open and there was profit taking, and you had everyone in the world looking to smack bids on stocks because they knew that this gap up was a great selling opportunity, you would have seen wham, 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 gap reversal, heavy selling. That's not what happened. When the sellers initially came in to try and knock the bid down, buyers were there instantly. And then as we started to really get into this part of the compression, you can notice how 10P is still falling in here. I told everyone, I said, get ready to buy. This is a bullish divergence. We are going to break out through this resistance level. I bought SPY. The entry price was $437.45. I was in right in here, and then we were off to the races. I took profits right in here. I made about 12 S&P points, but the point is this signal was spot on correct. Now, actually, as I look at it right now, we're getting another bullish divergence. Do you see how we got this bearish cross right in here? And you see how the market has been able to hold the bid very well? This is what I would consider to be a key bar. Market rallies up and you have a bearish hammer, an inverted hammer. Then you get this red bar right here that takes out the low from this green bar here. That's a warning sign. Now, typically, when you have super strong rallies, the first dip like this is going to be a buy. So you have to let it run its course. You draw your downward sloping trend line. When that trend line is broken to the upside, that is a bullish flag formation, and that is a buy, and you should look for continuation. That is lining up along with a deep trough in the 10P indicator, and we're about to see a bullish cross. That's at least how I see the market right now, and that is what I'm going to be watching for during the course of this video. In fact, on the other screen, what I'm doing is I'm going to be loading up my buy order for S&P futures so that if that happens, I'm ready to go on it. So now I've got my orders loaded, and if it happens during the video, I will execute that trade, and I'm going to draw a downward sloping trend line here. I'm going to connect this and this so I get a more gradual sloping line. I could connect this with this and get a very steep line, but every little uptick I might get triggered on that alert. So I want to make sure that we've got a nice, decent opportunity. Notice 1OP has not troughed yet. This is a predictive indicator. This is not a reactive indicator. It is telling us ahead of time when we need to use caution. Right in here, we got a bearish cross. It was telling us, be careful. This is a time to take profits. Here we get another bearish cross right about in here. So this monitors our activity. It dictates our activity, I should say. It governs our activity. So when we get these big troughs, if we were short in here, we'd be wanting to cover and we'd be looking for longs. Buy, buy, buy. Get this nice big spike. Now we should be taking profits on our longs because there will be a market pause. Now we get a nice big drop in the 1OP indicator. This would be a time if we were short to be thinking about taking profits. You can see the market's coming in. We don't have that 1OP cross yet. We don't want the market right now to get too far off of the high of the day. We'd like to see it find support in here before it really pulls back hard. If it pulls back hard, then all bets are off for this being a bullish divergence. Let me repeat that. This indicator is early. It tells us to be short here. So for a while, the market was moving sideways. We don't take any action because it hasn't crossed yet. And while this is unfolding, now we can start to see a little bit of selling pressure. So we would not even be tempted to buy until we have a bullish cross. So we're going to wait on the sidelines and see what happens while I describe how the morning unfolded. So we went into one search. Option Stalker has many searches, and they are all fantastic. What I wanted to do was to simplify the process for day trading. So I told everyone, this is a swing trading search. It is my favorite swing trading search. Pop, bull, very easy. And we went through the list, and we clicked on all the stocks in the list. Snap, excellent, but that's an earnings stock. AXP, also, and you could see earnings after the close yesterday, AXP was also an earnings play before the open. So we're not going to consider those because those are post-earnings plays. They're completely separate from what we're looking for. They're going to be all over the place just based on that post-earnings reaction, which we trade post-earnings reactions. But again, to simplify matters, we're only looking at two stocks. Johnson & Johnson was another stock that was on the list early today, and I told everyone, I said, listen, I don't like to see pullbacks like this, okay? So when the stock looks good, it takes out the prior day's high, this is all wonderful and everything. I don't like to see long red candles like that. Now the stock is choppy and it's moving higher. But let's exclude that from our list. There were two stocks that qualified at the time that we had this bullish cross right here on 1OP. There were two stocks that qualified for trading. One was Facebook and one was Google. And in the chat room, I gave a play-by-play on exactly what the market was going to be doing and how traders should react to it. And so what I'm going to do is I'm going to pull over the chat room so that you can see. And this is 30 minutes into the open. And I'm going to continue to scroll down here and you'll be able to see, waiting for SPY. And I'm just going to keep going. We're about to get a bullish 1OP cross. This would be the first one of the day. And this is coming in 45 minutes after the open. And so here, Snap, post earnings, AXP, post earnings. We don't want to deal with that. Here are your choices. We've got three other stocks, Facebook, Google, and J&J. We do not have a cross. Remember, 1OP is early. We need that technical confirmation. And I'm going to continue to Scroll down, I talked about preparing orders for these three and staging them so that when it happened, we'd be able to get in right away. J&J had a big red candle. That's not what we want, so we're not going to be looking at it. We're going to take it off the list. That was supposed to be Goog, and I corrected the typo. Excellent on a daily basis, excellent on a 5-minute basis. Facebook, excellent. So the table is set. Here, I'm long SPY, and this is an hour into the open. So we'll be able to take a look at the chart. There's my entry price, 437.45. I referenced the SPY, but I'm trading the E-mini futures. Everyone has the SPY data. Not everyone has the futures data, and that's why I do that. Still waiting on Facebook and Google, and now we get in because we've got that cross. There you go. So it didn't take long for that to happen. Now that you've bought, everything moves higher, and I start talking about different ways that they can manage profits. So let's take a look at what those two stocks did during the course of the day. Blank like that. I don't do this on an ongoing basis. I can't. I'm trying to trade. I don't have time to type in play-by-play commentary. What I do is I educate when I can through these videos during the day. I educate after the close. During the day, I'm expecting everybody to kind of mind their own P's and Q's and to take the lessons that have been learned and to trade. But today, I thought, I'm going to just do this. I had no idea what the market would do. I thought there was a good chance we might have a gap reversal early and that we'd be able to buy a dip, but we were forced to buy into strength, which I don't like doing. Here's what Facebook did. And you can see 1 hour into trading, right here is where we got our bullish 10P cross. And it's right there that we get the cross. It's actually before the half-hour mark, and this was our entry on Facebook. So right around that 367.50 level on Facebook, look, it went up to $375. See how easy? Google was the other stock that we looked at. Google was right in here. Now it did come back and it tested that entry point, but you could have stopped out for a scratch because it was at break even, or you could have held in to make sure that this level had held and you could have made money in here. But in any event, both trades, at very worst, Google should have been a scratch, but you should have had a chance to make money in Google as well. That's how easy it can be. Now, it can be very difficult as well as far as trading and entry. If you are keeping an eye on the market, and if you are doing your due diligence to find the best stocks, what is the best stock? How do we even define the best stock? Well, let's go through an exercise, and I'll show you exactly the things that I want in a really strong stock. I hammer this home every single day. It's so frustrating for me sometimes to have people ask questions. Well, look at this stock I got into. How come this trade went south on me? Well, the stock didn't have relative strength, so I'm going to mark relative strength on the S&P 500 on a 4-hour basis and on a daily basis. In fact, I want to be looking at a stock that's got strength right now while the market is pulling back. So let's mark relative strength on a 5-minute basis. Hey, wouldn't it be nice to have a stock where it has super heavy volume today? Yeah, it would be. Hey, wouldn't it be nice to have a stock that's above the prior day's high? Listen, folks, on a new all-time market high with the S&P 500 up 35 points, if the stock can't even make it through the prior day's high, I have no interest in it. None. Zero. Option liquidity. Yeah, hey, it'd be nice to have some good option liquidity because we like to trade options. So let's mark that as well. I could mark a bunch of other fields here, but I don't need to. As long as I've got heavy volume today, I've got good option liquidity, the stock is above the prior day's high, it's got good relative strength. Now I am going to be looking for breakouts, so I would like to see stocks that are breaking out. Let's click and see what we get. Look, this isn't a list of 50 stocks. This is a list of 8 stocks right here, right now, that look good. So we have a pending 10P bullish cross coming in, and we have a super, super strong market. And so now what I'm going to do is I'm going to put this off to the side. Actually, I'm going to put it completely out of view, and I'm going to just click through these results and see what we've got. No, I hate that. I don't want to touch a stock like that. Look at all this choppy noise back here. Forget about it. Sorry if I sound a little bit heated. I want everybody that's a member with one option to make money, period. That doesn't mean that everyone will make money, but you've got to avoid stupid mistakes, okay? What about this one? This is pretty nice. Look at that little breakout there on eBay. It is a choppy, chunky stock. Runs up, pulls back, runs up, pulls back. Then it does a whole lot of nothing. I don't want to trade that. Look at this. I'm going to get bored out of my brain sitting and waiting for that breakout. What's the daily chart look like? Okay, awesome. Big breakout there. Downward sloping trend line. Violated to the upside. Awesome. Horizontal breakout. Love it. Good relative strength on a daily basis. Sure, you could trade eBay. I'm not going to trade it because I'd be bored out of my mind. Facebook, absolutely gorgeous. Facebook's your play of the day. Really, really nice technicals there. Next one, and we've already looked at Facebook on a 5-minute basis, so I'm not going to go and beat that dead horse. Here you can see, let's put up the major moving averages. Let's see if there's some kind of technical breakout that makes us want to be in FUV. And here we can see downward sloping trend line broken to the upside, major moving averages holding. A lot of candles in here, not a lot of pace, not a lot of movement. No thanks. I think I'll look elsewhere. Let's go into the 5-minute chart and see what it's doing. Chunky, choppy, all over the place. Forget about it. We're not going to trade that. mRNA, all over the place. Chopping around. Yeah, it's making a new high in here. That's good. Downward sloping trend line broken to the upside. Yeah, it might gain some traction, but it's very choppy, so we should expect that this stock is going to move around. Now, this is what I do like. Look at this. Down, 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 down with the market. Up, 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 up with the stock. Oh yeah, I like that. I would day trade that for sure if the daily chart looks good. Oh yeah. Breakout to a new high. Yes, right here. This is 2.5 hours into trading. I would buy mRNA, and you can take that to the bank. If I get this bullish 10P cross, and if I get this downward sloping trend line, this is setting up to be a bullish flag formation. I just got to wait for this 10P cross. Again, market first, market first, market first. Absolutely critical to have that market tailwind. And as soon as I see what I like in the market, I'm going to be all over mRNA. I am also going to buy futures. OKTA. Hey, that's a nice little horizontal breakout there. We've got it above the major moving averages. This all looks good so far. I can tell the stock's going to be on its high of the day. So let's take a look. Oh, yeah. Down, down, down. Up, up, up. By the way, yesterday in the chat room, I posted exactly how you can get your screen to look like mine. When I want to have a look at the SPY on a longer term basis, I click on the right side of the screen and it reveals a 5-minute chart of SPY. I can go into any time frame I want. I leave the 5-minute chart up so that I always know what it's doing and I always know what the 10P indicator is doing. It doesn't take up a lot of real estate here, and this is critical for me. Plus, this setup allows me to watch what the stock is doing tick for tick versus the market. The final stock on the list today is TWTR. Hey, that looks really nice. Now it's a choppy stock, a little bit of a cup and handle in here, trying to get through resistance, some tails above body, but those tails are coming when the market is what? Selling off. As soon as the market regains its footing, Twitter is gone. It's gone. See you later. Nice breakout through horizontal resistance here. Twitter, 2 hours and 40 minutes into the open on Friday. Yes, I would buy Twitter. There we go. Downward sloping trend line, breach to the upside. There's my SPY alert. I'm going in right now and I'm buying the futures. Going to adjust my price. Sorry about that. I want to be long futures right now. So I'm going to buy the futures and I'm going to conclude the video. That is how we trade. Trading can be super, super complicated. It can be super easy too. If you have the right searches, Pop Bull incorporates all the qualities that we'd like to see in a stock. So if I'm only focusing on those strongest stocks and I'm flipping through charts just like I did, nope, don't like that one. It pulled back too far. Long red candle, stock is too far from its high. It's weak relative to the market right now. Take it off the list. This one's too choppy. This one has a nice breakout. That's the process that you go through. You find those stocks that really set up well, and then you wait and watch for the market to line up to the type of pattern that you want to have. This is an extremely strong market rally. Look at those long green candles stacked, one on top of the other. This first pullback, this dip, is going to be a buy. I'm going to watch it near the high of the day. I might be taking profits up there, but I am long right now. Twitter looks excellent. I would be buying it right here. I got my S&P buy signal. I'm expecting the stock to blow through. I also like mRNA, but mRNA I like more for just a day trade because this is some choppy, chunky action in here. When the market was surging higher, this stock was pulling back. I don't like that. I do like the breakout on a daily chart, and I do like this price action. So I would be long in here, and you can see it's already starting to advance. So Facebook is your pick of the day. 2 hours and 40 minutes into trading on Friday. I would definitely be buying Twitter here. I would definitely be buying mRNA here. And I am definitely long the S&P 500 futures. If this video sounds like a lecture, that's exactly what it is. I don't mean to sound heated about this, but you hear me repeat these same lessons every single day, and I just have to hope that for the vast majority of you that they are sinking in. This systematic trading approach really works. The best customer for one option is the trader who's been trading for 2 or 3 years with marginal success. You come in, you learn the system, you stick to the system, you do exactly what I've shown you, and you're going to turn your account around in very short order. Thanks so much. Have a great weekend. Thank you for watching this YouTube video. I'm Pete Stolzers, and I'm going to keep the trade ideas coming along with lots of education, so make sure to subscribe to the channel and please turn on your notifications so that you never miss another trade. If you like the content, please give it a thumbs up. I've loaded 2 other videos that I think you're really going to enjoy. Stay tuned. We'll see you soon.